The numbers and forecasts for the world economy are not catastrophic but remain disappointing. Politicians and certain bankers expected and promised near stellar result after COVID-related distractions were lifted. The years of washing money and finances were, in their opinion, a success story. A future of sustained growth and 2% of inflation would pave the way for the challenge and business for the 21st century, fighting climate change. However, to the surprise of world leaders, they have had to revise their macroeconomic forecast for the coming years and put the fight against climate change on hold. The buzzword these days is soft landing, an attempt to ensure that an economic downturn doesn't turn into a full-blown recession. Mostly prospects, nobody makes long-term prediction. Available forecasts only cover the next few years. US gross domestic products GDP is projected to grow by about 1.7% in 2022, by 0.5% in 2023, and possibly less in 2024. The data for the European Union are similar. In fact, the optimistic fanfare of 2021 was quickly forgotten. China's prospects look brighter, with expected growth of around 4% in 2022 and up a percentage point next year. However, the figures remain well below the country's performance to date and will certainly fall short of the above 6% target announced by Beijing last January and lowered to 5.5% in early March. Not surprisingly, China's central bank is currently pumping fresh liquidity into the system to prevent a deeper slowdown. The World Bank summarized this situation in its June report, according to which global economic growth will decline from 5.7% in 2022 to 2.9% in 2022. The January forecast for 2022 was 4.1%. The damage is particularly severe for developing countries whose growth rates are 5 percentage points lower than before the pandemic. Politicians are currently blaming supply chain bottlenecks and the Russian invasion of Ukraine for high inflation and weak growth. The explanation is doubtful. Of course, this federal picture doesn't take into account the consequences of anti-inflationary measures that may be delayed in coming months. No one knows what will happen after about a decade of glorifying the predictive leadership. The central bank's message about the state of the economy and the likely future trajectory of monetary policy. Central bank suddenly fell silent. European Central Bank President Lagarde recently said that forward-looking guarantee should be dropped due to lack of confidence. It would be added. Sometimes went wrong. Politicians are currently blaming supply chain bottlenecks and the Russian invasion of Ukraine for high inflation and weak growth. The explanation is doubtful. Of course, this federal picture doesn't take into account the consequences of anti-inflationary measures that may be delayed in coming months. No one knows what will happen after about a decade of glorifying their predictive leadership. The central banks messages about the state of the economic and the likely future trajectory of monetary policy. Central banks suddenly fell silent. European Central Bank President Christine Lagarde recently said that forward-looking guarantee should be dropped due to lack of confidence. It should be added. Sometimes went wrong. Politicians are currently blaming supply chain bottlenecks and the Russian invasion of Ukraine for high inflation and weak growth. The explanation is dubious. In the past 3 years, bottlenecks have been much tighter than they are today, and they will decrease in the future. This narrative doesn't explain the problems well. The authorities manipulated the money and credit markets. Furthermore, contrary to central bank narrative, slowdown and high inflation are neither unexpected nor temporary. The authorities manipulated the money and credit markets and engaged in widespread financial wastage for more than a decade. Countries around the world, around the West, and the West in particular, have engaged their governments and engaged in global regulatory efforts that have saved poorly managed companies from bankruptcy or being taken over by more efficient competitors. Governments have stifled entrepreneurship and encouraged the business community to engage in investment projects that would not have happened without negative interest rates, unsurprisingly wasted money and taxes fed inflation, while modest productivity growth and riskless regularly activity led to disappointingly low growth rates. The dislocation lasted a surprisingly long time, leading many experts to agree that negative interest rate and higher regulation could be the panacea. The world is now appreciating what a good economy offers rather than uncharted territory. Soft landing. So the critical question is what politicians are likely to do. To claim that the game is now called a soft landing is idle talk. You cannot address a landing if you don't know where you are from and where you want to be. Central banks are silent about what they will do if inflation persists and economic growth pick up speed.